Alrighty, this is going to be a playbook trade from Crude Oil on January 17th, 2020. Again, what are these and why are they important? Simply, these are A-grade setups, whether you took them or not, that have repeatable factors. They are here so that we can reference them. It's good to study them on the weekend, and whenever you get the chance to better understand your methodology, go in deeper as to really what constitutes a trade for you and look at the factors that made that trade what that trade is. So in the future, when you see it again, you understand what it is and how you might be able to then react to it. So as usual, I like to start with my morning prep. This is what I live or die by. If it's a bad prep, I'm probably going to have a pretty bad day. So this is what we posted. And actually, this is oh, that's my bad. This was the after. So I posted this right at the close of the pit session. So the morning one was posted earlier, but that only showed up to here or whatever because this is the after. So regardless, the levels didn't change. We were looking at this bearish reference is really what we were looking to get tested. So this is obviously after the whole sell-off, after the whole Iran situation, and we kind of had some distribution, a little bit of short covering as we failed to press below this 5760 zone. And then now we were looking to kind of test back up and reach back up into some of these upper targets to provide some relief. So where did this zone come from? We have 19 CVAL, monthly DVL, and QPVAL. So this is where it is, and this is the day of the Iran situation, I believe. So we had it come down here, or maybe it's the day after, but this was this big zone we were kind of keeping an eye on because we made a composite of this day, and the end of that day. Yeah, this was the Iran attack. This was the day after. I remember now. So this was kind of where we started to form value, and so we have this nice composite here, and this is obviously the composite value area low. And then this day, we had this sell-off, and we've seen it kind of act as this value inflection point multiple times. So after we pressed down, went to try and get imbalanced right after the crude oil report this day, and failed. The obvious next move then, as we started to rotate back up, was to eventually come and test this area. I thought it was going to happen yesterday because we did kind of get imbalanced for a while. However, that didn't make it. We see it stopped right here, which was pretty interesting. But today, right at the open, we ended up tagging that spot right there. Looking at it from a market profile perspective, so again, this is the 8th Iran attack. I think I may have split the profile to make this composite, but this is what I mean by the 19 CVAL. Oh yeah, okay, 19, 110, 111, there's a few days of distribution then in here, minus the weekend, that created this composite that we have this composite value area low from, as well as the close from that day. So you can see again from another view, we just pushed down, found value, attempted to go imbalanced lower, failed, started to push higher. So as soon as we started to get this P profile shape, we were looking for it to then kind of test this zone again that we had been tracking since we had pushed lower. The long-term VWAP perspective is going to be looking at the quarterly prior value area high, this monthly developing value area low to retain that monthly imbalance from that -1 to -2 standard deviations. We were looking for it to come up and test this, keeping in mind that this weekly, which is the blue, is largely rotational, and it was a Friday. So you have a largely rotational Friday weekly DVA. You're not really particularly looking for it to fade too high into the extremes. This is already a +2 up here on the weekly, right at that quarterly prior value area high, which led to the confidence of this 59.10 area. Now overnight, we had this, let's see what's happened. Okay, so we had a failed breakout right at the pit session close. Coming into the overnight session, we did eventually come up, push through, retest, found buyers, and we went imbalanced. However, as we approached the pit open right here, you can see we have a divergence. So buyers took it a little bit higher here. No active buyers on the tape there. And you can start to see that we're really pushing back in. Taps VWAP, comes up. It doesn't even get to the +2 this time. So as you're coming into the pit session open, you're seeing this imbalance. It's not looking strong. It's looking pretty weak. All right, so let's look at what actually happened. We had the pit session open. We say, okay, we look at our swing high. So our swing high hits, pretty much hits our little bear zone here, comes back down. We sell off. You might be kicking yourself saying, "Oh, I should have shorted it right here." I don't like to do that. I like to pay attention to the swing high and the swing low before I'm going to start trading after the pit open. And so here we go. We come back up. We get ourselves a nice another opportunity to enter with a very controlled risk point right at that +2. You're fading an extreme of DVA. It's a bearish zone with multiple confluent points, and it provides you that nice opportunity to get into a short. So you'd get in rhythm on that bearish Heikin Akashi bar, and first destination is this inflection point from the morning prep. That would have been a nice place to scale. We popped back up, and this was interesting because it wasn't actually that aggressive on the order flow. So this popped back up. It wasn't all that scary. If you had missed these two entries, this was another great opportunity to involve yourself in that trade, and then press back down. Now, if you had scaled your first part of your position here, and now we were holding down, a great place would have been to exit completely, as you start to see this imbalance fail. Because just like we saw in the morning, now we're pressing VWAP, and we're really not doing a good job of rotating between this -1 and -2 standard deviations. So really anywhere in this area, as we started to see a bullish divergence in the order flow, would have provided reason for you to then exit completely. This was also us kind of rejecting off the edges of this larger distribution that we have here. It kind of pushed in, accepted, came into this point of control, and was just holding. So we were expecting some chop, but realistically, if you were trying to get it to stretch down to this target or this target with the -2 all the way here, you're going to need a lot of energy to really push it down there. So anywhere in here really would have been a decent exit point for your position, giving you about a 2.9 to our trade. So what went into this trade? We had a confluent bearish reference, multiple time frames, multiple type of stars aligning, if you will. We had a major trend being bearish. Obviously, right now crude oil had that large sell-off, so the major trend is bearish, meaning higher time frames are going to be less likely to step in and try and catch a falling knife. And if anything, we're going to see the buying come in via higher time frame short covering. But we're in this kind of distribution phase. Rotational on the weekly coming into a Friday, so the weekly is going to hold some value on a Friday because it's had all that time to develop. And obviously, if it's rotational, then you'd be looking to fade extremes. Weak and failing imbalance in the pre-market. So in the pre-market session, we already saw that imbalance starting to tremble, starting to fail as we came up and touched that level. And then there was the opening swing failure. So the opening swing high, we hit that opening swing low, pushed up, and you saw it fail back down. So if buyers were going to bring it up, you would have wanted to see them do it right away right there. And that's really what composed this trade. And I'm going to keep this for future reference. I'll go back and watch this usually on weekends to see my playbook trades. And I hope this helps you, and I suggest you guys start building out your playbook as well.